Welcome to the Industrial IoT Spotlight, your number one spot for insight from industrial IoT thought leaders who are transforming businesses today. With your host, Eric Walenza.
Welcome back to the Industrial IoT Spotlight podcast. I'm your host, Eric Walenza, CEO of IoT ONE, the consultancy that specializes in supporting digital transformation of operations and businesses. Our guest today is Graham Gordon, Product and Strategy Director of Sapiens. And Sapiens is a leading global provider of software and data solutions for the insurance industry. In this talk, we discussed how the insurance industry is using IoT data to more accurately assess risk and to customize insurance premiums. We also explored the challenges of applying data analytics to areas related to consumer health due to privacy concerns and to the long tail of B2B use cases due to complexity. If you find these conversations valuable, please leave us a comment and a 5-star review. And if you'd like to share your company's story or recommend a speaker, please email us at team@iotone.com. Finally, if you have an IoT research, strategy, or training initiative that you'd like to discuss, you can email me directly at erik.walenza@iotone.com. Thank you. Graham, thank you for joining me today.
Good morning. Thank you.
So, Graham, this is a topic that is a little bit out of my depth. We're talking about insurance tech here, but I think very relevant to just about everybody in the world somehow. So I'm really looking forward to you educating me. But before we get into insurance tech, I'm actually very curious how you ended up there. I think you have quite an interesting background. You were working with Masternaut, with Cybit, working with LexisNexis Risk. How did you find your way now to Sapiens?
It's a curious evolution. I'm not quite sure if it was by design or whether it was deliberate, one of those two things. Masternaut originally, that was a commercial fleet telematics organization. So we could define that as moving IoT, so taking data from a commercial vehicle, because that's where it was available from, and then putting it into a company's infrastructure so they can manage their business from it. If you think about transport logistics, routing, scheduling, the dispatch of a mobile engineer. And then that technology in around 2005, 6, 7 led itself quite nicely to consumer telematics. So that's when I started to get involved with insurance companies and launching UBI programs. So I know it's a current theme at the moment, but these things have been around for an awful long time. I think one of the first commercial ones in Spain was around 2010, Germany 2012. The UK obviously had been leading a while for that one, mainly on the young driver side. So that kind of led down one path. And then I joined LexisNexis, who are a data analytics company. So if you think about absorbing, normalizing, contextualizing lots of data from multiple sources into something that's insurance usefulness or insurance useful. So that's the provision of data and scoring. And then Sapiens more recently is, okay, how do you actually use that data? And Sapiens is a policy administration system or insurance software system. So the pathway for me has been right the way from, InsurTech right at the start through to, big data analytics. And then now, more recently, how do we actually take value of that or take value from that and use it?
So you guys are not an insurance company. You're selling technology solutions to insurance companies or to users of insurance products? Who are your customers? How do you fit into that?
Our customers are insurance companies, and we supply the insurance software to them. And that's a big term, and that can cover anything. So a way of describing it is, how do you buy insurance yourself? Or you can go online and fill the forms in, and then you can go to an agent, or you can go direct to the insurance company. So we look after that whole end-to-end process that starts with you getting a quote from the organization. So absorbing data from multiple sources, scoring it, looking at the consumer information, presenting the quote back to them when they click buy, and making sure the billing's all organized and all that kind of good stuff, the policy documents. And so everything that goes right the way through, any midterm adjustments, and obviously, the claims, making a claim and the process, and then the reinsurance at the very end of it. So that's kind of like the core of the organization. And if I think about more recently, it's, everything's moving online. So there's more analytics work coming into this. How do we help consumers choose the right cover and the right product? So big education piece and flowing that through using machine learning and, aggregation of large data sets to help the insurer automate as much of these kind of processes as possible. When you see an organization saying, I can give you an insurance quote in 60 seconds, well, we're the technology that enables that. So we go running around, pick up lots of information and help the insurer through that process of how to, price it, cover it, send the documents to the consumer and everything in between, like I said. We've got about 600 customers around the world broadly, and it is very broadly. It's a third from North America, a third in Europe, and a third the rest of the world. Rest of the world is a horrible term, but Australia, Thailand, Singapore, lots in Africa, Southern Africa in particular. So we get quite a comprehensive and quite a macro picture of what's going on in the insurance world around us, just because of the diversity of the customer base that we have.
I'm curious what digital looks like insurance right now, because if I think about just my personal experience, on the one hand, I know there's companies like, so I'm sitting here in Shanghai, China, right? So companies like Ping An that have thousands of data scientists and make a lot of investments in tech startups and are very tech savvy. But on the other hand, I have a few friends that are basically running around Shanghai selling insurance the old way, knocking on doors, building relationships and personal networks. And, hey, do you have your insurance? Do you need to, so it feels like there must be some parts that are pushing the frontier of digitalization, and there's other parts that are basically operating like they were 100 years ago. What does the industry look like right now?
It depends. Everyone says it depends, but let's think of me and you as a consumer. We're really comfortable going online, filling a form in, pressing a button. I don't want to speak to anybody. I want everything done just in a minute, and it's no drama to me. Have you met my mother? Good luck getting her to do this, because she'll want that kind of face-to-face contact with the broker that she's been working with for the whole of her life, or her whole of her working life in the same company, who come and sit down, talk to her, explain the cover, explain the options, and then we'll go away and get 3-4 quotes from an insurance company. So they do a lot of the work, and that one-to-one relationship with the brokers, still important for a large segment of the population. Particularly, if we start thinking about business insurance as well. So you've got SME, your sole traders or companies with less than 10 employees, go online, get the cover suggested, take care of it very, very quickly. And then a more complex risk, multiple sites, multiple transport hubs, or multiple vehicles, or many, many employees that need someone to sit down, understand the business, collect all the documentation and negotiate, and then again give the end customer options and choices about which insurance company they want to use. So you have this kind of dichotomy of, hell yeah, we could put everything online, to remember there's a consumer at the end of this that wants the choice.
That's, let's say, the front end. In there, we're talking about kind of the transition to e-commerce. And then you've got the back end of this, where you have to be assessing risk. I think you mentioned UBI. Maybe you can quickly explain what that means. I guess that's more from a consumer perspective. But then you get into, how do you assess risk more precisely, I suppose, than we used to, where you just kind of put people in broad buckets and then...
Yeah, so it's exactly what it is. So let's pretend for a moment we're the same age and we live in the same district, and we both have this different wives and family, but we look the same. Me and you look the same. So it would make sense at the moment, using the data sets that's available, combination of public records and your claim history, and that me and you would get the same prices. So all these things that the insurance companies are pricing at the moment are proxies for risk. They look at the buckets of people like us and say, right, your propensity to claim is X, therefore we're going to price you at Y. And what usage-based insurance does is make it more dynamic and relevant and personalized to you as an individual. So simple ones that everyone's working on at the moment, mileage propositions. How many miles am I driving? I might drive 10,000 a year. You might drive 4,000 a year. What does that mean for the exposure, the risk that you've got? Or even down to kind of the more sophisticated solutions, which are monitoring how you drive versus how I drive. So what's my acceleration, braking, speeding profile look like compared to you? That will tell me what my price should be and what your price should be. And then adding contextualization to that. So what type of roads are you driving on? What time of the day are you driving at? And again, that provides another level of insight that can, separate me as a risk from you as a risk and give me a price that's very, very different from yours. So it's a growing trend now because consumers are beginning to understand some of this, and particularly with COVID, when vehicles were sitting on the side of their garages or in the street for days and weeks and months on end, they weren't being used. And then all of a sudden you find out you're paying the same insurance prices if you were using them. So mileage programs are definitely starting to take off at the moment, and we're seeing a lot of activity around those. And then that naturally leads to usage-based insurance, or UBI, which is more about, okay, what do I actually do? And how does that affect my risk?
And I guess the central element of the solution there is data, right? And then you get into the question of how do you get that data? Because you're talking about getting data about where I am, how fast I'm accelerating. These are, so there's the technical challenge, I suppose, of actually getting data from all these different sensors and sources. And then there's the privacy issue of how do you get permission to use this data to make commercial decisions? What's the approach here?
Let's do the privacy one first. That's relatively simple. So everyone we work with is really, really transparent. Here's the data we're taking. Here's the data we're taking from third-party sources. Here's what we're using it for. Do you consent, yes or no? So that's a very, very simple way of making a complex situation look quite hard. So everything that the consumer's consenting to is articulated and it's clear for them. And that's really, really important because you need to trust what this is doing and understand the benefits. And people like it, people don't like it. If you don't like it, just continue with the way that insurance has always worked. So it's all about consumer choice there.
And is there usually a bit of a carrot attached to say, hey, if you allow us access to more data, we might be able to reduce your premium?
Oh, significantly. The carrot is definitely the safety and the premium reduction. There's a story here. So if you look at, probably the most developed UBI or usage-based insurance market is the UK. It started with young drivers because there was a problem with young driver fatalities and casualties. When you're a kid, you get in the car, you drive very fast, you drive late at night, and you had a pretty high chance of causing a collision, injuring yourself very, very badly, or, even death. So one of the first solutions to look at, if we say IoT, exchanging data, was for that young driver market. And over the course of the past 10 years, the casualty rate has fallen by 44%, which is, more than any other technology or road design or speed cameras or anything else you can do. To have that drop, the only difference is telematics. And the telematics in the vehicle monitors the driver's speed, time, location, all those things we talked about earlier. And the flip side to that is, if I am a driver with less than 2 years experience, I'd expect my motor premium in the UK to be something extraordinary like £2,000. What telematics does is you understand the risk, you understand the client, you're clear to them about, what you're allowed to do. Don't drive fast, don't drive at night. So you're educating the driver right at the source. You say, if you do all these things, your insurance price is going to be £800. So that's a pretty good incentive for these kind of technologies. And that works very, very well when you've got this large premium to get down. The next challenge is how do you take that approach and put it into the mass market, because the benefits are clear.
Yeah, I'm really interested in this because this is a topic a lot of other industries are also wrestling with, right? How do we use pricing, use data to make better pricing decisions and so forth? How real time is this? So if I'm a teenager and I go out speeding, do I get a message from my insurance provider the next day or maybe even an hour later that says, hey, your premium is going up next month because of the behavior? Or is it does it show up in my next bill, or how is this actually shown to the consumer?
There's a number of approaches. So some of the and particularly the young drivers. Let's talk about that. Young drivers with less than 2 years experience, or a driver that's returning from a ban or a conviction. And there's a couple of approaches. So one is the money approach. Okay, your driving score is X. That means your premium this month is going to be Y. Again, going back to these variable pricing. So if I'm driving like an idiot and I'm speeding, I'm going to be paying more, and that's calculated monthly. The data for the consumer is available in an application 9 times out of 10, and it shows them the score of the individual trip. So that data is aggregated on a trip level. And then you've got another approach is 3 strikes and you're out, which is more draconian, but it's still quite effective. So if you go over the speeding limit by 10% 3 times a month, we're going to cancel your insurance. And that's a pretty heavy incentive as well. I think young drivers start to understand this quite quickly from their peers and other people where this has happened to, that you don't necessarily want your insurance cancelled, because it makes it so much more expensive to get cover from, the next insurer. So there's a little bit of a stick approach there on the monthly premiums and then also on the cancellations. And a lot of companies have tried to look at non-fiscal motivations. If you drive nicely, we'll give you a Starbucks voucher or a coffee voucher. They don't tend to have worked so well. I think people are reacting more to money in their pocket than free coffees, or I've even seen organizations offering free car servicing and things. So it's really, really good. And it's a really good example of just how far, I'll call this mobile IoT, has worked. We'll probably talk about this, later. There's a lot of information, there's a lot of technology out there, and it's nice to find one that lands and has been very, very successful.
So you said that's the easy part, and then the challenging part is getting the data, or what's?
Getting the data's all right. There's multiple methods of doing it. Many manufacturers that are manufacturing these devices, and then you layer on top of that the embedded devices from the cars themselves. Most of the cars manufactured today will have a telematics device in it that can send data from the vehicle to wherever it goes. All these devices operate at different frequencies. They cover things differently. They have different interpretations of what things are. So you have to normalize all of that. There's a large scope of work that goes on there as well. And then cost is the other factor. So we talked about mass market. Works very, very well when you have a massive premium difference or a massive premium upfront cost. When you start getting into our age of drivers, our motor premiums, let's assume we haven't had a claim in the past 5 years, they're actually quite low if you think about it. And then you start to say, well, actually, we're going to add another 10% onto that premium to cover the cost of the devices or the data extraction or whatever. It doesn't necessarily stack so well. So that's been a problem. So everyone understands the benefit. This cost issue is the next one. And that's largely being solved now by smartphone-only applications, whether you're using the smartphone accelerometer, you're using the smartphone GPS to give you, enough data to score the driver on. Comes with its risks because, of course, the consumer can just turn it off. But there's again, going back to consumer segmentation, there's a large group of people that are quite comfortable with that because they understand the benefit of it. And the benefit's always going to be a better insurance price than they'll get by going the traditional route.
What about let's say companies like Tesla that are now kind of turning the vehicle into a computer? So I suppose they have a lot of data that would be useful for you. Do they have any incentive to provide this data in order to maybe tell if you drive a Tesla, you might be able to get lower insurance because we have the data that would enable this, or are they pretty much is that a no-go for them?
It's an interesting one, and it's Tesla, so everyone thinks they're like, when they announced this for, was it California? Everyone's like, oh my goodness, they're so innovative. I'll go back to it. The industry's been doing this since 2006. But because it's Tesla, it looks different or it looks shiny. What I will say, and why it's important to Tesla and for most car manufacturers now that are selling electric vehicles, if you think about the whole life cost of your vehicle, you've got the maintenance, you've got the sticker price or the purchase price, you've got the insurance, you've got the resale value, and that's pretty much about it. If you've got an electric vehicle, the fuel cost as well, obviously, sorry. If you've got an electric vehicle, all of a sudden that maintenance cost goes away and that fuel cost kind of goes away. It's still there, but it's hidden somewhere in your home electric bill or whatever it's going to be. So it's hidden. And you're left with the sticker price and the insurance price. So all of a sudden the insurance starts to become more front of mind for the consumer because you're noticing it because you don't have those other costs that, we're used to when we're driving petrol and diesel cars. That's really, really cool. And then because of the safety technology in the vehicles now, there's a whole body of work around the ADAS technology, so the safety features in the vehicle. So whether that's lane departure warning, autonomous braking, cross-traffic alerting, some of the stuff to make sure you're staying awake. And as the cars start to move more autonomous, this is all around. The car is doing something better than the driver can itself. So a car equipped with autonomous braking can brake faster than you or I can. And you kind of look at that and go, well, actually, if we've talked about, at the start, we talked about how these vehicles are priced or how our car insurance is priced at the moment. It's all based on me and you as individuals. And then we're looking at UBI, me and you as individuals and our driving styles, patterns, and times of days. And now that emphasis is changing to the actual vehicle itself and what technology is on the vehicle. The first kind of route in this path is how do you identify what's on the vehicle itself? And the second one is how do you get that data from the vehicle into the insurance infrastructure? And then the third one is, which we always get asked for, what happens if the consumer turns the safety feature off? So has the safety feature been turned on or off? You might get irritated by the beep every time you cross the center lane or something like that, so you turn it off. So insurers do want to know this, but they need to kind of go back and say there's actually benefits for looking at the simpler stuff first. And then eventually, probably might not have been retired by this time, all these things are going to combine to look at, product liability versus personal liability. If the car's got all these safety features in, if the car can drive itself, if the car can act and be a better driver than I am, that emphasis is going to change to, okay, product liability for your motor insurance and which part of that's going to be personal. But I think that's still a long way in the distance.
These cases where a car that's been kind of on an advanced form of autopilot has crashed, right now is that liability, the courts are basically still allocating that to individuals as opposed to the OEM?
Yeah, go back over the history of time again. There's, GM did their OnStar, which is one of the first insurance products that used this kind of data. Progressive in the state have been using it with their snapshot program. Multiple European examples where they package the insurance and the car pricing and everything together. They do these just add fuel programs when you're buying the car, and it kind of like was going in a reasonable trajectory and then just stopped. And it stopped largely because of a couple of things that happened around financial crises and all the rest of it, and how willing OEMs were to invest in these kind of things, and also the technology side of it. But they're terrified about the privacy implementations. It's great if I, as a car manufacturer, I know who's driving the car, but once that goes into the secondary market, there's a whole raft of things that have to happen to make sure that I'm not collecting data on a consumer that hasn't consented to it. So that kind of slowed everything down again. And then what's happened over the past 18 months is suddenly just, picked up. And again, it's coming to the front of mind again. And, I think it's largely because some of those technology issues that we talked about and the privacy issues are solved. And, the car manufacturers have got more confidence in this, and they want to start, taking more of the consumer ownership, getting a payback for all the investment they've made in this technology.
Okay, super interesting space. And this is only in vehicle, let's say personal vehicle insurance. I suppose you could go into B2B. I mean, we have customers who are moving hazardous chemicals, and I suppose that's a whole another ballgame there, right? Let's still go a little bit into Sapiens offering. So if I'm looking at your data and digital solutions, I see basically three components: the digital suite, which looks to me like different maybe SaaS applications, the analytics and BI, which seems to be around kind of data, maybe the structuring and offering, and then eMerge, which looks like a platform. Can you help us understand a bit more what is the technology behind these offerings actually look like?
The technology, what we build it on, it's all cloud enabled, is the first thing, so it can be deployed anywhere, anytime, operates 24/7. So digital suite is interesting because the insurance industry, if you think about the software that goes into, managing millions of consumers, a lot of this technology is decades old, but it just works. But it doesn't work in the new digital environment. So the whole point of some of the Sapiens work here is how do we allow these kind of really cool consumer journeys or SME journeys that can happen on an app or online or wherever the customer wants to be. How do you do that and still do that on legacy systems? So we put a kind of digital layer on top of it where we can use the API orchestration to extract data from the core policy database, how the insurers price on this old technology, kind of drag it into the 21st century by putting a digital layer on front of it. So that's a huge growth engine for us at the moment, because everyone just wants to buy quickly and simply, I suppose. The platform side of it is more about distribution. So we talk about our consumers as being the clients, but in a lot of cases, insurance companies, they've got agents, they've got brokers. So it's the kind of same approach, but I'm delivering that information to the broker or the agent for them then to have the conversation with the end consumer, like we talked about, that kind of one-to-one relationship that's really, really important. So it's the same principle, but you're just delivering that into an environment that a broker or an agent can use. And that gets quite interesting and can be quite complicated, because you're trying to present information for the broker. The broker's always going to represent the client, not the insurance company. I think that's an important distinction to make. So quite often they're presenting 3 or 4 different quotation packages. So we're allowing them to access that in near real time, and then make those kind of decisions about what products and cover levels and costs they recommend to the insurer themselves. And then data analytics, well, look, that's the buzzword and the value at the moment. 2 sides to this. Number one is helping the customer choose the right products coverages, and that can be done a number of ways, where we're looking at large data sets of what do customers that look like you buy. Well, they bought this, so that we can recommend that. And also the education side of it. If you're doing this online, as a consumer, I want to see what I'm covered for and what I'm not covered for very, very quickly. I don't want to go back to the days where I've got 16 pages of terms and conditions and cover limits to read through. We don't do that anymore. So there's a huge body of work that goes into scanning these old documents, looking at them, and then trying to extract, okay, these are the pertinent points. Let's make this really, really easy for a consumer to understand. And then the second part of that is the recommendation of products and cover limits, cover layers for the consumer, because we're not explaining anything to them face to face anymore. So we have to do that as part of the buying process. Claims is fascinating for this kind of, if you make a claim, I know it's only going to be 10% of an insurance customer's, we call them book of business. So it's not everybody, but how do we extract all of this data on the claim, verify it, put a fraud score on it, and then pay the person that's making the claim as quickly as possible? There's huge work and a lot of analytics, and particularly on the data extraction side of it that goes into it to allow people, or to allow the insurance companies to make these decisions. Okay, these ones I'm just going to pay straight away. I've got all the information. I trust the consumer. They've filled the form in. We've put it all online. We can scan the documents. We can scan the images they're taking of the asset that's broken or the insured risk that's broken. We can run that through verifications, some of these UI techniques that you're using or we're using at the moment. And then we can pay them within minutes or hours of the claim being made. And then the next one is how we route that through the insurance company's organization. So if it's complex, it goes to the claims adjuster that will manually review it. So there's a whole body of work that goes into that, because the insurance companies recognize if they can reduce the cost of claims processing, that's going to translate into lower premiums for the consumers. If you think about what an insurance company does, it does 2 jobs. It takes money from you and pays you money if you have a claim. So claims is their biggest cost. So a lot of work that goes into understanding that, and understanding how you can aggregate big data sets to give you information to make decisions, whether those decisions are automated, where you've put algorithms into it to pay the consumer immediately, or whether they route back into the insurance company's claims infrastructure. What needs a person looking at it to make a decision and what doesn't? I think that's a really easy way of describing it.
What you're describing here seems to be more or less an entire insurance process, right? So everything front end, back end, data analysis, the whole life cycle management. Is this often the case where an insurance company says, hey, we want to be a financial service provider, so we're going to basically buy all the technology and we're just going to handle the financial services and let you handle basically the tech element? Or do they have their own platform that might be kind of a legacy platform that they've built up internally and want to own, and you kind of plug in and fill particular gaps? Maybe it depends to some extent, but what's more common here?
That awful answer. It depends. We've got some customers where, over a period, let's say 15, 20 years, they've got their kind of core database, I wouldn't even be able to describe what it's called, but people in the industry know what they are because it's only one company that provided them at the time. And then they build different software components to solve different problems. So, we can do this claims thing over here, or there's this new underwriting algorithm technology we can use, or this, and they end up with this network of hundreds of different software applications that solve different things. The other thing about the big insurance companies is they buy other insurance companies who have repeated that process. So a lot of the work is, how do we orchestrate and replace a lot of that? So these are multi-year programs. How do you take all of these different things and put them into a central location or a central thing? We call it the organizational brain. So we don't look at it like a policy administration system or a database anymore. It's like, okay, this is the brain of the insurance company. How do we extract and exchange data of all these different places it's got to go to ultimately deliver the right data to the right person, the right time, in the right format, and then the compliance story for the right purpose? So there's a huge element of organizations where we're helping to do that. And then on the flip side, organizations that have got cloud delivered software, they're on the right kind of technology stack, is how we can exchange data, again, through API orchestration with some of the insurtechs, and just making these kind of platforms far more open, so they can look at some of the insurtech technology, some of the investments that are made at the minute in really, really cool stuff. We talked about telematics a little bit there. We'll talk about home IoT, I'm sure, in a minute. How does all that work so they can make decisions to onboard these kind of technologies without the expense of changing a whole legacy system?
No, I can imagine this is as complex probably as is dealing with any ERP, legacy ERP implementation in a large manufacturer, right? But let's go into this home IoT. So this is, I guess, if I'm just kind of trying to remember a stat that I read a couple of years ago. But if you look at healthcare insurance costs, some large majority is allocated to people above the age of something, I don't know, 60, 70 years old, right? So it tends to be in the late, maybe the inverse of where, what it looks like for drivers. And now, of course, you have a lot of devices that are in the house. That I've got a friend that's working on something that basically watches your grandparents and can use some machine learning to kind of figure out, hey, grandma's walking a little bit slower, a little bit. There might be some cognitive decline. We have to have somebody go check on her. But there's potentially a lot of value in preventing falls and so forth. What does this look like right now in terms of impacting actual insurance premiums and decisions?
Well, this is really hard. And this is the one that it's hard to unpick. And we'll talk about the kind of the three different segments to it. The first one is, if you read an analyst report, you see these 45-degree lines that go like this, 45 degrees straight up. That's the compound annual growth rate. And that can be wearables, it can be devices in the home, the smart home devices. We'll talk about those in a moment, I think. And you look at that and you go, wow, this is amazing. And I read a stat that was published by one of the analysts. They're talking about now there's 20% of homes that are connected. So there's a hub in the home that can take data from multiple devices, and whether those devices are listening for water leaks or monitoring temperature or even looking at people's movements, which I haven't looked at with an insurance company yet, but I'm sure we'll get to it. It's really, really interesting that there's so many use cases for this. So that's the story and the kind of hype around this market. What I'm not seeing is too many actual individual use cases for it where it's deployed for people and I can actually buy an insurance policy based off this data. And I think that's the next opportunity for the marketplaces. Pockets of activity, everywhere around this. So it makes perfect sense. As a consumer living in a normal home, the rest of it, I can buy a device that sounds an alarm. If it hears the smoke alarm or the carbon monoxide alarm, I can have my front door with the cameras on it. I can have door and window sensors. I can put the device next to my water boiler so it can understand if there's a leak and temperature. There's this whole body of work called machine listening. It's not machine learning, machine listening. glass breaking, noises, all these different things. There's a database out there called Alexandra, I think it's called, that's got 30 million different sounds recorded, classified into a sound library of 1,000 different attributes. So it's like all this stuff's there. And then you look at, what's actually counted when they talk about this. So, the wearables, the home devices, and it's really difficult to unpick. So where do we start with this one? Do we start with the fact that it's all there? Or do we start with the fact that no one's really sure how to use it yet? And I'm not quite sure which direction to go on this.
It feels like you need some kind of intermediary. You need like a Google or a Bloomberg of, because otherwise you have all these OEMs, which are often kind of small businesses or or it's Sony or somebody. And then you have all these and they're selling products all over the world. And then you have all these insurance companies, and you can't have one-to-one relationships and negotiations between these, right? So you have to have an intermediary who's saying, I'm gonna get access to all this data, and then you can plug in and you can kind of tap the data feed for 3 cents per consumer per week or whatever. Have you seen anybody working on this problem, or does that seem like potentially one of the solutions to this problem? How do you see it?
It is, but I haven't seen it in real life yet. So the exchange, we kind of call these exchanges. Again, going back to that connected car, same problem. How do you connect multiple car manufacturers or multiple insurance companies? So you kind of got this kind of, the rise of the exchange where the car manufacturers would feed the car data into a central database, and then the access to all that information is equitable for the insurance companies. So everyone has got access to it, and that's the way it works. That's going to be interesting. Private companies are doing it. I was involved with some of the work there at my previous company doing this, and then it might be a legislation-driven thing as well, where the EU step in and say, actually, we want to have this central database that makes it equitable for everyone to share and use this data. On the IoT home side of it, I'm sure there's work going on somewhere, but I haven't seen it. And again, we go back to who's actually selling and making these devices. So we've got, if we look at the two big ones that everyone's familiar with, Amazon, Google, that's like 75% of the sales combined. There's not much wriggle room for anyone else to get involved on that kind of layer. We talked about some of the services there. The technology is all out there at the minute. Machine listening, I'm a big fan of this because I can see the value of it. But consumers get freaked out by it. And it's only 2019, I think it was, when Amazon had to change their terms and conditions and say, well, actually, we're not going to listen to you anymore. Because they were doing some of the anonymous listening to understand, how to kind of build up this library of sounds so they can start to look at some of these services and open them up to their third-party developers. And then it all kind of paused because the consumer ultimately got freaked out by it. So what we've seen in the home IoT space, if we look at consumers first, high net worth, high value clients for the insurance companies will invest in the technology, and that will be part of a precondition for their insurance. So if you or I owned a $5 million home and we had a car portfolio of another $1 million, as the insurance organization, I will come and I'll sit down with you on a one-to-one basis, and I'll give you a technology roadmap that includes a lot of these kind of services with the latest alarm technology, et cetera, and that will be a precondition for me insuring you and your contents in your cars. So that's the kind of use case for these IoT devices and the technology and the always-on kind of monitoring of them at the moment, and that works really, really well. How the heck do you take that to mass market? Because now this is all about our home insurance might cost just $500. And as an insurance company, my profit margin on that $500 is single digit. And now you're asking me to introduce technology that has a cost to it. So you have to be pretty clear on the benefits of it and forecasting the benefits of it. So if I'm sticking a $50 device into that kind of ecosystem, well, that's largely my profit margin. So I want to know damn well that that's going to have a payback to me in reducing my claims costs further down the line. And that's very difficult to monitor and forecast. So for mass market, we're seeing a little bit of experimentation on it. we've got a couple of clients that are baking these kind of sensor technologies into the policy. So we go to it, we buy it, we get given a sensor. And at the moment, we're aggregating that kind of data, looking at it and trying to work out, is that actually reducing claims in the way that the device manufacturers are saying? Is the accuracy of the devices working the way that it's intended to? And trying to build those kind of data sets that will allow these decisions to be made in the future. And then obviously we've got the, I think, although I'm not certain about this, it's probably one of the only companies in the world that's doing this, to every single consumer, is the one in the US, who are a public traded company, so we can see everything and how they're getting on with it. They do home and contents insurance, and again, they provide the devices that monitors, windows opening, water leakage, door alarms. I think it is a kind of reasonable service. And temperature as well, obviously, as well. So is the room too cold or too hot? If it's too hot, probably got a fire. So you're able to kind of play this out in real time and have a look at their loss ratios every quarter and see how they're progressing with it. Unfortunately, they're only writing in 2 states at the moment, and one of those states is a propensity to wildfires. So you have to kind of just think about this at the moment. They took a big hit last year, but you can see it. And I think that's really, really important. And that kind of service that I told you, that service wrap around the high net worth clients, the big body of work now is, look, how do we take this into the mass market in the same way as what happened with the connected car story that we started with? And that's where it gets interesting. And then finally, talking about the IoT devices and the technology there is, look, if I'm a consumer and I buy this and my home is connected and I've made a conscious decision to have all these services, what does that tell me about a consumer compared to someone that has elected not to buy all those services? So we're going back to this kind of body of work that looks at trying to identify who's bought what and using the fact that I have something like this as the proxy for risk. So if I've invested into it, if I've got smart home network, if I've got auto lighting, if I've got a chime doorbell, connected smoke and carbon monoxide alarms, all right, I might not be connected to the insurance company, but the fact I've got these tells you something about me that is very, very different from the consumer that hasn't.
Yeah, and just the fact that you have these devices operational will, potentially reduce the risk. On the business side, are businesses at all interested in negotiating and saying, "Hey, we can certify that we've got 10,000 employees across the world, and in the buildings where they're active, we can keep air quality levels above a certain degree, or we can." We have a different. One of the things that we're looking at for one of our clients right now is a device that goes over chairs to measure your posture, basically, right? Because actually, back injuries are, I think, one of the leading causes of workplace injury, and it's often just a chronic. You sit too much and you sit with the wrong posture, and eventually you say, "Hey, my back hurts. I'm gonna make a claim." So things like this. Are you seeing proactive conversations around this data?
Definitely. And we've got an awful lot of clients in the Nordics. So Denmark, Sweden, Finland, they're social democracies, and they care for people an awful lot more, and it's amazing. So they're using claims data to understand all of this, and then they can start to look at what you just described, that and lots of other different things, to prevent the claim ever being made in the first place. So we're into this kind of occupational health, we call it, and all those kind of things like that. But it's based on evidence of claim history. And that's a really good example of what you can do with accessing these large data sets now, is you start to see and you go, actually, this is the biggest cost that we have. This is the biggest problem that we can solve. And then how do we prevent that from even happening in the first place? And that's all around the use of the technology and the data sets to actually identify issues. And then sure, once you've identified them, you can start taking action. Historically, all this kind of data points have been in pockets of places in an organization, so it's never been centralized where people can see it. So it sounds weird to say that, but they sit in kind of isolated little pockets. You never get this kind of overarching big picture. Once you've got the big picture, you start to understand that. And if you ever go and have a look at a insurance company in the Nordics, a huge focus for them and huge investment. They do a lot of group policies, I call it. I think this is where they started from, with unions. So they have policies that they sell on a group level to individual unions, and then that drives a lot of the activity. Because if you're working standing up a machine all day, what's that going to do to you? Well, we can actually adjust your posture. We can start to proactively come in and have a look at your employee health, safety, air quality, all those all those things, and it's very, very much a proactive basis rather than how do we process the claim as quickly as possible. And we're seeing that everywhere now, but they seem to be the leaders in it.
Yeah, it makes sense. So maybe we need to start looking at the Nordics rather than the Chinese market, because the Chinese market, I think it's a ways before employers are looking at how their posture of their employees are. What about are you seeing business model innovation, or so maybe I'll give you an example here. So we see a lot of interest in businesses that manage heavy assets figuring out how to servitize those, let's say. So I build construction equipment, and I sell it to a distributor, and then they sell it to somebody, and I have no idea where it is, but maybe I can sell this as a service over a platform. And then somebody goes on the platform and they log in and they rent it for a few days, but then you have to allocate liability for that period of time. So you have this challenge. Or I sell manufacturing equipment, and instead I'm going to give it to you, so it's always in your factory, but you're going to pay me per use. But again, now that maybe the machine is not owned by that factory; it's owned by either me, the manufacturer, the OEM, or it's owned by maybe a third-party financial firm that's leasing it. But do you see much innovation around this in terms of how insurance is provided?
I see a lot of learning about it. We call it embedded insurance, I suppose, is the overarching theme to this. So the product comes with the insurance embedded into it. In large businesses, because of the way they insure themselves, it's actually quite difficult to unpick this. So a large business will self-insure up to a certain amount. And then if you start getting into these things like, insurance for individual equipment components and insurance for this, that, the other, you'll probably end up taking it because it's just a service, so you might as well. It's easy to buy. But the way they're actually structured and the way they insure themselves is very, very different from you and I buying insurance. It's a difficult one to kind of unpick how far that's going to go. The other side of that is for smaller, medium organizations. So let's take that big piece of capital equipment that we're renting. At the moment, if I run a construction company, I'm insuring myself as if I'm operating those machinery all day, every day. But the reality is I'll probably use it on a project by project basis for a week at a time. So my insurance premium's sky high because all I can say to the insurance company is I'm using capital equipment, I'm using diggers, I'm using machinery, I'm using this, that, the other. And they go, okay, that makes sense. Well, here's your price. And getting down to that kind of level where you can go, well, today I'm using this piece of equipment, tomorrow I'm not. It takes quite a lot of discipline for the end customer to actually, go on and say, today I'm using this, today I'm using that. So in principle, all this works. But again, you're going back to how do we make this a lot easier for the insurance company to understand what's being used and when? Again, most of these machines now have the technology embedded in them to extract the data from it. So, they're coming equipped with communication, so you can technically see what's going on and how it's being used and where it's being used. But it is difficult to kind of bring that into the insurance environment and scale it. A lot of these things, or anything we've talked about today, can work really, really well on a project by project basis. But for an insurance company and for us, a lot of this is volume based. How do you make it addressable to everybody, not just a small niche group that you can tactically manage very easily?
Yeah, that's always the challenge in these B2B is that you're dealing with this long tail, and also I'm sure that there's a certain percentage of small business owners who wouldn't be against trying to figure out how to turn off that sensor so that it looked like they were never using the equipment. You turn it on once a quarter.
You're renting this equipment on pay per use now. That's the thing. So you're paying for the number of hours you use. So it would make natural sense that you're insuring for the number of hours you're using it. So there is an opportunity there, but like I say, it's just because of the nuances of how businesses insure themselves, it is difficult to unpick.
Okay, well, very interesting space. I think you've made the insurance industry much more interesting to me than I would have expected. Right? So, obviously, data is really at the crux of innovation in the industry. I think we've covered a fair bit of territory here. Anything we haven't touched on that's either very interesting or very important for us to know?
When I speak at conferences and everyone talks about use of data, technology, the rest of it, everyone always talks about Facebook and Instagram and Tesla and the rest of it. And I go, yeah, but two of those organizations have got the sole purpose of selling you adverts. Just look what we're doing. We're protecting people. We're sharing that risk across, multiple countries, industries, et cetera, and giving a consumer confidence to drive a car or a small business confidence to invest and knowing that the insurance company's got their back if something goes wrong. So everyone always talks about insurance as being this kind of like, monolithic, big old thing that hasn't changed for 200 years. And I go, well, that's not actually true. It's a really, really exciting space and, you can go anywhere with it. And guess what? My mother doesn't have Facebook, but she's got insurance going back to where we started. So it can actually touch every single consumer on the planet as well. So, I hope that was a kind of interesting way of looking at it, but it is an exciting space. And, like I say, because of everything that goes on, there's a lot of technology investment that's being made, and it's probably at the forefront of some of the big themes that we've talked about today.
Yeah, no, it's a fascinating space, and I know a lot of the tech startups that I'm talking to are keenly interested in understanding how they're relevant to insurance, right? So, the consumer product or industrial product. Graham, I really appreciate you taking the time to chat with us, but I think for a lot of folks, this is just maybe touching the tip of the iceberg. If people are interested in reach out to you or getting in touch with Sapiens, what's the right approach here?
My email address is graham.gordon@sapiens.com. So that's relatively straightforward, and find us on the web and find us on LinkedIn. But be happy to talk. And we do get, for your insurtech organizations, we do get a lot of interaction with insurance companies, and they're looking for us to bring technology to them and ideas all the time. So we welcome it with open arms.
Graham, really appreciate that. We'll put those in the show notes for everybody. Thanks again for your time.
Thank you.
Thanks for tuning into another edition of the IoT Spotlight podcast. If you find these conversations valuable, please leave us a comment and a 5-star review. And if you'd like to share your company's story or recommend a speaker, please email us at team@iotone.com. Finally, if you have an IoT research, strategy, or training initiative that you would like to discuss, you can email me directly at erik.walenza@iotone.com. Thank you.